It's been a fascinating and exciting week in the commodities and mining equities space. Here to go through some of the events that have been occurring and to reflect perhaps on what it all means. I'm joined by SP Angel's John Meyer, a veteran in the mining sector and a man who knows a thing or two about a thing or two. So John, very good to see you.
Yeah, it's nice to be here.
So should we start with gold then? It's probably the obvious place to start. The price has been moving around quite spectacularly, and some of the equities that you and I both look at have been caught up in the fallout as well. What's your take?
Well, I've been working as an analyst for about 35 years, one way or another, and it's the most extraordinary week I have ever witnessed. It's just been unbelievable. We've never seen commodity markets move this far, this fast. Will have caught a lot of people off guard. Huge amounts of it's just been extraordinary. There's no other way of putting it. Gold going up to, what was it, nearly $5,500 an ounce. Even companies that don't hedge gold, don't forward sell gold forwards, will have been having meetings to maybe change that decision because, we've said it before that gold is the new oil, but you've got margins of 3 times your operating costs. If you're producing gold maybe at $1,200 an ounce, and suddenly you're able to sell it at $5,000, and there's a futures market you can sell into, you might want to sell your next 10 years worth of production into that. And there's good reasons why people are buying gold as well. It's the ultimate inflation hedge. It's the best hedge against geopolitical risk and other things melting down. If you remember in 2008, when markets melted down, when Lehman Brothers went bust because of the subprime crisis. I mean, I know they like to call it the global financial crisis, but the fact is, okay, gold did pull back a little bit, but gold then took off again very fast. So it's something you buy when you're not sure what else you can buy in the world. You really think everything else is a bit unsafe. And so I think there are lots of people with really good reasons to buy gold, like Iranians, people, maybe Iranian generals, maybe just Iranian people who are looking to escape the regime. Their currency is collapsing, so converting into gold, you'll do it at any price. Then you had all these guys investing through Tether, some of them switching Bitcoin and other cryptocurrencies because they're worried about their wallets being compromised with quantum computers coming along. Then, of course, the Federal Reserve was, they held rates, which I think was a good thing because it helped to calm down markets. But if they drop rates, then commodities go up again. So I think what we're seeing now is we're seeing a little bit of a pullback. I think it's healthy, but I don't think the party's over by any means. I think copper prices, they hit $14,000 a ton. Last year we were looking at sort of $8,000 to $9,000 a ton. But we're pretty sure there's going to be a shortage of copper going forwards. A lot of physical copper's gone to the US ahead of potential Trump tariffs. And we know there's this big problem in Indonesia. Okay, the Grasberg mine looks to be coming back into production, but there's this mud rush situation could happen again. It's quite an uncertain situation, and how much of it comes back and how quickly does it come back. Probably we don't see much copper from that till the end of the year, and in the meantime we could be seeing a deficit of 500,000 tons. So that's surely going to keep copper higher. And of course copper is seen as a transition metal, as in transition into electric vehicles, into the sort of the broader electric economy with wind farms and solar farms and all of that. And remember, the solar thing is also driving silver, because physical silver is needed for the ribbon, the sort of the conductivity ribbon in the solar panels. And everybody's installing solar panels all over the world. So there's a lot of that happening. There's no less solar being manufactured. So the mining industry's had a tough time for 10, 15 years. There's been a huge lack of investment, so substantial underinvestment in the sector. and lots of reasons why it's been going up, and it's just caught everybody surprised by how fast and how far it has moved.
Yeah, I mean, it's a fascinating economic backdrop to be operating a mining company in, isn't it, John? Let's talk about some of the companies which you follow then. I'll reel off a couple of names, and then perhaps you could tell me what you think of them. I'm thinking you talked about gold and copper, so that brings Anglo Asian to mind, and then there's also Fresnillo and Hochschild operating in this space. Tell us a little bit about those three to start us off, and then perhaps we'll broaden the conversation to a few others.
Well, Anglo Asian Mining, it's one of our clients. It's certainly growing its copper production very fast. It was doing a few thousand tons a year, 5,000 or 6,000 tons. Now that's going to go up to 25, 26,000 tons maybe. And then on in future years, hopefully it gets to 45, 50,000 tons as it brings in new mines. But it's very fortunate in its joint venturing with the government of Azerbaijan on the Demirli mine. That should bring in, I'm thinking 10 to 15,000 tons this year. And then eventually it gets up to 20,000 tons and maybe goes beyond that. So that's quite low cost production. There's also the gold production as well. So that's quite good. Maybe it does 45, 50,000 tons. I forget what the guidance is exactly. But it's in a good position. So yes, I think, to have that combination of gold and copper puts them in a very, very strong place from an investment perspective.
And a good track record as well. Obviously, they've been they've been producing for a while. They know what they're doing over there.
Yeah, management are very well proven. They've, if they encourage complex geology, they get through it and they make sure they can process the stuff. So these guys are first class when it comes to the technicalities of mining and production.
So tell us a little bit about Hochschild then. What are your views on that one?
Well, it's a good play. It's a gold and silver play. It mainly works out in Peru. It has production of, well, it does over 200,000 ounces a year, and it does 7.5 million ounces of silver. So when we're looking at things that people buy and sell, you compare Hochschild with Fresnillo. Fresnillo's it's quite a stable company. It does about 590,000 ounces of gold, and then it does 90 to 100 million ounces of silver. So, it's a good sizable company. Doesn't seem to have done quite so well. Mainly operates out of Mexico. So, when you compare the two, the market always likes to look at something where it can go long and where it can go short. And it may be that the market will perhaps short Fresnillo, go long Hochschild, that kind of move. So it creates liquidity, and it gives people a chance to hedge what they're doing, so that you're not 100% exposed on the upside and on the downside if gold and silver suddenly move in different directions.
Yeah, it's fascinating. Fascinating to hear about long and short in precious metals. I wonder if people are doing that at the moment. It's a risky business.
I think there are fortunes that will have been made, and I think there will be investors that will have been stopped out as well. So when you see these prices move so fast, what it means is there are investors being, shall we say, killed off along the way, and it's very dangerous to use leverage money in this sort of volatile trading environment, because you will get stopped out, and that will hurt.
Yeah, indeed, hurt badly. So what else have you got on your horizon then? I mean, you follow a lot of companies, John. Tell us some other ones that have been catching your eye lately.
Well, I like what's going on at Greatland Resources. They've got the Havieron project there. They're all in Australia. So they've got growth. They acquired assets at the right time last year, and their production rate is awesome. They're not the lowest cost producer in the world, but they're doing 250, 310,000 ounces of gold. The production cost is about $2,500 an ounce, so it's not the lowest, but it gives you a bit more leverage. And the thing is, because they're investing quite heavily, the wonderful thing about the gold price being where it is, it means they can pay off that debt much faster. So I see Greatland is actually in a good space, and I've seen it. The stock's come off a little bit recently, and it's natural that there might be a bit of profit taking from people who've been in there for quite a while. But I think it will have a second leg up, and that's so. I think there'll be a good opportunity, and if I, as an investor, I would look for that stock just to pull back a little bit more, and then I'd be buying in.
It's a great story, Greatland, isn't it? If you cast your mind back all those years ago, it really is the exemplar of the microcap dream come true. And it was capitalized at just a few £1 million, in within living memory, let's say. And now look where it is.
Yeah, and this is what we look for in the mining sector. We look for companies. I mean, and ideally, you find a company that is pre-discovery, something like Aterian, which is a client of ours. In fact, they just announced this week that they were that they had some quite good indications of copper. These are surface chip samples. They're using some machine learning technology in a joint venture with a French company to try and put the geology together, and hopefully that project in Morocco will turn into something more tangible and meaningful. It's difficult for us to really value these things pre-discovery, but in an ideal world, something like this, just as an example, can turn into a resource. Then that resource can have some economics put around it. Those economics start to look meaningful, hopefully. Then you put a mine plan on it. Then you raise the finance for it, and then before you know it, you've got a proper copper mine. And if you look at things like that, I mean, take Moxico, for example. I happen to be a founder investor in Moxico, and it's a private company. But I would value the Mimbula mine there, which was literally just an old pit when I first saw it about 8 or 9 years ago. And now I'd say that has a value of about $2.5 billion. So you can literally go from zero to that. It will take a few years, but it's something you buy it, you tuck it away, and you wait for the value to come through. And a lot of it's down to good management. You need to have people who know what they're doing, but it can work. I'm thinking of other examples. Cornish Metals, there's a client of ours. Nobody was interested in tin in Cornwall for many years. The mine was shut down in the late 90s, early 2000s, and in fact, I worked there as a student, so I know the situation quite well. And now they've drilled some of the deposit. They understand the resource. They put some financial numbers around it. They're not going to drill it in great detail. They don't need to. We will know where the tin is, and they are bringing that into production in the next couple of years. The financing is all being put in place as we speak, and that will become a very meaningful tin producer. And actually, what we've seen over the last couple of weeks is tin prices rising to $48,000 a ton, $50,000 a ton, to levels that nobody even considered 6 months ago. And it looks like the tin prices will stay at elevated levels. So we're looking for about $45,000 per ton of tin going forwards. We see the Indonesian government's closed down a lot of very small, quite environmentally unfriendly small operators, and they're taking control of that. And that some of that tin will reopen, and some of it won't. So it's an important market, and I think it's important to remember what's one of the underlying drivers of all this is China. China is checking up on its mines. It's checking the permits. It's checking the environmental situation. It's checking on the health and safety, and that is causing them to restrict production in a number of areas. It's one of the reasons why lithium prices have gone so high, is because they closed some of the production because they said, well, hang on, this is surplus to capacity or to requirements. We're not sure about your permits. We're not sure about the way you're operating environmentally. We don't like some of the health and safety. And this is causing them to close a few things down or at least restrict production. And that's causing prices like rare earths, like lithium, tin, probably lead and zinc as well, to all rise as they sort of, shall we say, put their house in order. And I think this is going to cause China to export a degree of inflation to the rest of the world.
Do you have any companies you like in the lithium space?
Yeah, we work with Kodal Minerals. They're operating in Mali, and they're operating successfully. They are already exporting spodumene out through port in the Ivory Coast. They're working in joint venture with a Chinese company, so that's all very smooth. They produce great quality spodumene, and now that the price, the spodumene prices have lifted from a low of about $650 a ton to nearly 2,500. I think we're at $2,300 a ton today. So it's a very big move in lithium, and it means that companies like Kodal and Atlantic Lithium, who we also work for, will be extremely profitable. So Kodal is in production. Atlantic Lithium are hoping to go into production soon. They're waiting for the government of Ghana to just sign off on the latest version of their royalty agreement, which is more sensible than the last one. So we're just waiting for that all to come through, and then hopefully Atlantic Lithium will sign a few checks and get finish the financing and get that up and running.
So you mentioned China a second or two ago, John. It's not really that long ago that everyone was talking about China in the context of rare earths. Is that still a live issue? And if so, are there any companies in that space that you like?
It's a very, very important issue for the world right now, and a critical issue for Europe and the United States. China has been really smart. They've made sure that they control the world's rare earth supply, in effect. And it's not just about China controlling stuff. They wanted to build enough production to meet their own demands. And this is where I think the West, the politicians love to say, oh, China is trying to restrict supply to us. It's, well, China wants to use the rare earths internally. Why should they share them with everybody else? They've gone to a lot of effort to subsidize and invest in these rare earth mines, and they're very lucky. They have these huge ionic clay deposits, which of course they will eventually exhaust. So why should they produce this stuff at a subsidized price and then export it to the rest of the world? They want to keep it at home. So the West is working very hard to try and find more rare earths. Now, lots of people love to say that rare earths are not rare, and okay, they're true. That's true, but in reality, finding economic rare earth deposits is really difficult. So you've got a company like Herencia, who we're just working with, who have a project in Madagascar. And Madagascar was a very difficult place for a long time. The government didn't like signing off on anything, and in fact, the Base Resources Toliara project was stalled for 5-6 years. And I think that will get going quite soon. But the irony for Madagascar is that Energy Fuels, who bought Base Resources, have got other things now that they're going to look at, and maybe they won't go ahead with it. So tough luck, Madagascar. You should have signed the paperwork a bit quicker. But Herencia,
Harena, I think you mean, don't you?
Harena, sorry, I keep
Yes.
making that mistake. Harena, they have a very sensible project, and they can do 3.5 tons of rare earths a year. Most of it's the heavy rare earths, which is where the value is. Those are what we call the magnet rare earths: the neodymium, the praseodymium, the dysprosium, and the terbium. These are, and a lot of this stuff is used in wind farms, in the turbines, the electric vehicles. Tesla tried to use magnets without rare earths some years ago, and actually they had to kill that idea off and go back to rare earth magnets, because your car just won't go so fast. Your battery pack will not last as long if you're not using more efficient motors. So you have to have these things. There's no easy way to get rid of them. Yeah, you can energize a motor with more power and without rare earths, but it just isn't so efficient. Anyway, going back onto point, the Harena project, it's in Madagascar. It seems to show some good numbers. They've done an early pre-feasibility study that's just recently published. They get an IRR of 30%. We've just seen rare earth prices go through $100,000 for neodymium and praseodymium, $100,000 a ton. So that's it's all heading in the right direction. And so companies like Harena are critical to the West right now. So the finance, the US State Department will one way or another make finance available. They're pushing that out through various funds and development organizations. So yeah, this is something we're looking at, and I think Harena will be broadening its horizons going forwards.
I'm going to throw one more name at you before we wrap it up, John. New Frontier. Have you got any thoughts about that company?
Yeah, it's another company we work with, and these are good guys. They know what they're doing. It's very early stage, but what they've got is they've got a project called Hearts Range. It's not far from Alice Springs in the center of Australia, so it's a hot old place. But it means that no one's going to bother you in the area, and they're drilling it. So we're waiting for drill results to come out of that project. Those, yeah, we're quietly excited. They've also tested a 25 kilo bulk sample to see how well, if they can upgrade the grade there. And in fact, they've got this new process, this flash Joule heating technology, from a group called Metallum in Australia, and they reckon they upgrade the ore from the ground by 20 times. Now that's really important. That upgrading process means that you can add value very quickly and very easily. So what we're now waiting to see is roughly get some idea on how big the prospect is, because I'm going to call it a prospect, and what sort of JORC resource we might get out of that in the future. I'm not going to say future years, because I think they're going to drill it off much faster than that. I think, but we need to get an idea of the scale of this, and we don't quite know yet. They've got a bit of an idea because they've been taking chip samples from here and there and everywhere. We need to know how far down does it go, what's the depth, and we need to know the strike length. And I don't want to put numbers on it yet because we'll get that from the drilling.
So we'll wait and see. It sounds like an interesting, an intriguing prospect there. So finally, to wrap it up, John, perhaps you could just give us a quick insight into how you think Indaba is going to go this year. It's obviously going to be pretty lively. Have you got any thoughts on that? And are you going?
We are looking forward to going down to Cape Town for the Indaba. Yes, it's where we get to sit down with a lot of investors and a lot of companies, and we try and figure out, who's who in the zoo going forwards. Definitely, there are going to be some development organizations running around, some government-funded projects. We've actually in recent years, we've seen more and more of this coming in. And we spoke to the European Critical Materials Fund earlier this week. So there's going to be a lot more of that as the West tries to help mining companies get going. These poor old companies that were so starved of cash a year ago suddenly are being refinanced. They're suddenly taking off. I mean, unfortunately, Western stock markets have been subject to an awful lot of short selling over the last few years, and this means that the shorters are now having to scramble out of their positions, and we see these stocks suddenly turn around very fast. You might see a 20, 30, 40% turnaround on a day when the shorters have to pull out, and the new funds start coming in. So look, I'd love to say it's really lovely to see, but I wish the short selling had never been there in the first place. But it's great to see that companies that were really victimized and hard done by are now actually able to get funded and get on with the job. And I think what we'll see is much faster progress on a lot of projects that have really been held back.
John, great to talk to you. Have a productive time in South Africa.
Thank you. We look forward to seeing you down there.